Hello everyone, welcome to the Green Effect podcast. This is episode number 39, and we have the incredibly knowledgeable Peter Cuttini, George Dube, accountants from BDO. They are amazing partners of mine on the accounting side. They know their stuff, and they very much know investors as well. Today's show, we got to get updated. We got to find out what the latest CRA, Canada Revenue Agency, trends are. Who are their favorite clients? We're going to call them favorite. And what's an arbitrary assessment? A little scary. What are the changes in 2020 for the self-employed? Hints for investors in 2020. And we start our conversation about corporations and lending. And this is part 1 of 2. We continue it in part 2. And we're going to talk more about part 2 at the end of this episode to let you know what's coming up. Without further delay, let's get going with Peter and George.
Welcome to the Green Effect Podcast. Finance, life, business, and everything in between. And now, your host, Stephen Green.
Hello, everyone. Welcome to the Green Effect Podcast. Today, we have our first repeat guests in Peter Cuttini and George Dube. Welcome, gentlemen.
Thank you.
Thank you.
So Peter is a client service partner with BDO Canada. And of course, George is a tax partner also with BDO Canada. You guys happen to be having your offices here in Waterloo. So before we get into some of the topics that I want to talk about, really quick, give me a quick recap of your backgrounds in accounting and how you got into this whole thing.
Sure. I'll start it off anyway, and Peter, I'm sure, will interrupt me. Put in a tidbit or two, but Peter and I were classmates at the U of W's accounting program. Actually, to the best of our knowledge, we never met there, or it was across the hall type of thing.
Or you don't remember.
Or we don't remember. We lived in different circles at that point in the game. In fact, we didn't meet until 2010, when basically at that point we were both looking for partners for our accounting firms. Hooked up together, created Dube and Cuttini, and from there, the firm certainly was heavily focused with real estate investors, developers, construction trades, etc., and a number of other types of clients as well. But no question, there was a hefty basis, if you will, on the real estate side of things. Come 2015, and we grew the firm to, during busy season, to be about 25 people or so.
Yeah, you definitely grew. I remember that. Like, I remember being at that old office on Queen Street. It was an old century home or wartime home, whatever it was. And I remember boxes and growing and tons of staff. So
it was fun.
Yeah.
And come 2015, prior to that, we were approached by a handful of national firms. Really had the dialogues with BDO where, in our mind, we'd have more of an opportunity to remain focused on entrepreneurial clients and have some more of that environment, but now have, to our advantage, be able to reach out to a GST, HST expert, for example, to be able to reach out to somebody that was expert with foreign taxes or different countries, or even more in depth on the U.S. tax side of things. Peter was a U.S. CPA practicing and taking care of our U.S., but he would, I think in fairness, say you were quarterbacking, doing some more of the basic, but not the heavy duty planning to that side of things. And even on the income tax side, again, we think we were pretty good. But now we had more people to bounce things off of all of a sudden for different little specialty areas, which as times progressed, has been really nicely with us at BDO. And as part of that BDO side of things, we've remained focused on the real estate side. And I don't know, probably 75-85% of our clients would be, again, what I would call in the real estate industry, but then we'll have a number of people that will have their consulting firm, their medical practice, their accounting, law practice, whatever it happens to be, and a lot of consultants. We want to take care of the whole picture so we can have a real comprehensive tax, accounting, monitoring plan available for clients.
I think that's important too, because no secret, I'm clients of yours and your firm, and As everyone knows on the show, it's I've got I'm a director of a volleyball club, and the governing body made us go not for profit or non-profit. I still don't know exactly what it is, but the cool thing was I came into your firm, and you did have the right person that does this thing all day long and answered questions and the whole bit. So that there's a great deal of value there for your clients if if that's not necessarily your specialty, you got the right person for it.
It's getting harder and harder to be a sole practitioner or a small firm.
Yeah.
Just too much you have to know.
Yeah. And I ask clients that too. Like, and as you know, I deal with a lot of investors, and I always ask them, like, does your accountant understand rental properties? And honestly, I see so many T1 generals in my time. It's like you can sniff it out, right? You just see them, and you're like, okay, what did you miss? What happened here? What happened there? But yeah, I hear you on that. That's for sure. I definitely see that. So, okay, so give us the latest, and I hesitate to say greatest. What are you seeing with CRA audits? Last we heard, I believe investors were very popular targets, realtors. What are we seeing out there, guys?
CRA about 8 years ago, created a pilot program in the real estate industry. It was extremely successful. They've now launched CRA real estate auditors across the country.
Oh, so we've actually got an office of folks that do this full time.
Absolutely.
Several teams.
Several teams. And the project started here in KW.
And successful means
to them.
They were right. Someone was making money, and it wasn't the person filing the taxes, I'm assuming.
In the last 3 years, our HST partner shared this with us, that CRA has brought in an additional $1 billion of revenue just in the real estate. And of that, $450 million was in the first 9 months of last year.
Oh my God!
They've hit a gusher.
Okay, so how does that happen? Incorrect tax filing?
Incorrect tax filing, incorrect positions. HST was a massive area. Whether they didn't know about it or willfully blind to it.
And I think on the GST and HST side, like if we go down, it's not conscious often to us in that if we go and we buy some lumber or a can of paint or whatever it is at the hardware store, we're not even remotely thinking of GST, HST. But now all of a sudden you buy $1 million, $2 million property or more, and you've got another 13% on that. And again, depending what province we're speaking of. Oh, wait a minute. Usually this works, but those times it doesn't, now it's expensive.
And people were just getting bad advice. Like, if you were doing assignments, oh, that's not taxable, or CRA will never catch you.
I had one of your partners, and I'm sorry, his name escapes me. He was on a video, and he was talking about this. Yeah, assignments with new builds and HST, and
it's probably Scott Mary.
It was Scott, absolutely, yes. And I was listening to this, and so now when I have clients come and ask me about assigning and stuff, I'm like, I'm going to send you this YouTube video. You just study it and make sure, because this is the problem.
We've had arguments with clients or realtors, and whether it's a flip's not capital gains. Rent-to-owns are not capital gains, and the tax implication is very different on that.
So tell me more about that then.
So a flip, you're actually doing a business. It's not a long-term hold. So if you go to sell the property in a year, 100% of that is income. Of your profit is income.
So your intention was always to sell it. It was not to hold it as a long-term asset, if you will.
So if they don't see any rental income, but you're reporting expenses.
It's not so much the reporting of expenses. It's that on a capital gain, half of the gain is tax-free.
Right.
As opposed to now, if 100% of it goes on is income, that could be expensive if done wrong.
So did they find that there was a lot of learning for the accounting community of and you say, when we say bad advice, is it incorrect advice because they didn't know, or is it they just willfully just didn't do it properly?
I think in many cases it's truly not intentionally trying to do something wrong, just not knowing or not getting having professional advice, but listening. Kind of a classic, and you can kind of pick the industry this is still relevant for, but I talked to my neighbor, I talked to my neighbor's dog, and I blah 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 blah.
I saw this on Facebook.
Right. Yeah.
And a lot of things too, I'll see it on the internet, and I forgot to look whether I was dealing with the correct province or let alone the correct country in terms of which rules I was following.
That's common. So, I mean, I'm going to date this podcast recording a little bit, but just yesterday, the U.S. Fed dropped their rates 0.5%. I almost ran out of fingers and toes to count how many emails I got saying, "Oh, I heard RBC drop their rates."
Right.
Well, what? No, RBC and U.S. they don't equal this. It's not the same thing, right?
It's funny you say that. How many we've seen clients who are, or prospective clients thinking that if they own a property for a year, it's their principal residence.
I've heard that.
That's not necessarily true.
No.
And I just see the worst I've ever seen. Someone actually said on their Facebook channel or whatever, I'm not a big Facebook person, say something to the effect that, "Oh, I've got this property. If you buy it and fix it up and sell it, it's going to make you X. And if you live in it for 12 months, it's all tax free." You just basically told CRA you're going to sell it in 12 months.
So they're going that deep, and they're actually checking.
That's not deep. That's
when I say deep. Listen, like they're checking social media.
That's easy.
Yeah. All right. Scrub your social media, folks.
Yeah. The other
Get
problem,
on there.
The other problem is, no offense to CRA, they've hired a ton of people. Not all of them are fully trained or up to speed yet, and we get a lot of clients get audited. There's more and more audits out there every day, and clients are not seeing the time it's taking us to fight. It's not the easy what it used to be, because I hate saying it, we're training some of the CRA auditors. Some of them are very good, but some of them are green.
Well, and I had, what was the gentleman's name? Oh, goodness. PC candidate in Kitchener Central, where I live. I can picture him, but I've just drawn a complete blank. This came up. Actually, I think I identified you guys, and no big deal. That we knew that was happening, but we asked about the CRA process, right? He's a federal candidate.
Right.
We asked about that, and he said, well, he recognized there's new people. It is what it is, right? We hired more people. We've done it. But he said, we know that is an issue. Like, we have recognized it. Unfortunately, we have to go through the process. If there's a problem, then, we'll bring it up and we'll try to work through it. But having said that, I know the heartache and stress it causes, right? Because then they're asking for weird stuff and that's tough.
Yeah. Or
That's
you get
not
the
easy.
client saying, "This should have taken you 15 minutes."
Yep.
It's not 15 minutes.
No. They do. There's a lot more background work.
Absolutely.
Yeah. And I can speak. So I mean, we can talk about this. I'm okay on the air talking about this, but I got a letter from CRA saying they wanted to see all my stuff for my wife's medical expenses.
Right.
I put through on mine. And so is that considered an audit? Is that, or just hey, we want to double check?
That's information request.
Yeah. So, I mean, technically, yeah, you can probably call it an audit, but that's not what Peter and I are referring here to, because those, admittedly, for the most part, they're asking for medical receipts, donation receipts, maybe childcare. There's some common things that they look around for, and we'll have somebody on the team kind of put it together. Most of the time, you either added it up correctly or you didn't.
Okay. So is that almost like a check to see if they're going to keep digging?
Not necessarily.
No,
because
okay.
I hate saying this. Every year, CRA has their hot button things, whether it's a donations or medical or transit passes, or like last year. Like, this is sometimes I've really got to question CRA. They introduced the climate incentive, right? So because the carbon tax, you're getting money back. We had clients in the summer who got these information requests to prove that they had 4 people living in the house.
Really?
Yeah.
And these are not big tax dollars here
Like,
either.
we're talking $300.
Wow.
If we factored in the cost of enforcing that thing, I mean,
You're losing
it was
money.
ginormous.
Yeah. Odd.
Yeah.
Just odd stuff. And even that request for information, though, that's stressful. I remember when I got that letter, I'm like, oh crap. And I'm thinking, now, listen, I don't sneeze the wrong way on a tax return until I call you guys, right? So I'm like, I know all's on the up and up. We
Sure.
did it right. But I mean, that's stressful, because now I've got to dig out receipts, and God bless that guy that asked for it. I think you're only allowed to upload 10 files on their online system. I think I had to do that 15 times. I sent every freaking receipt. I'm like, here you go. Take it all.
Yeah.
Review it all. And I'm pretty sure he got it. And he's like, good enough. I don't know if that actually happened or not, but I know that's what I would have done. But
You probably looked at the big ones, saw they were acceptable, and moved on.
yeah. Yeah, because there were a couple of big ones in there. Yeah,
Yeah.
absolutely. So, all right. Well, that's good to know. Now, what else have you seen from CRA on audits, reviews, stuff like that?
They're just aggressive.
Yes.
And I don't know that that's something specific to this year. Certainly it's not. But we have found an increasing line of aggressiveness where, and again, this is certainly not the case in every situation by any means. But I think some of them at times kind of almost, I don't know, lose their interest in it and just say, okay, let me get this file passed along. We've had a couple of scenarios where I've been trying to chat with the auditor, or I mean, our team first tries to chat with them. If that doesn't go so well, then I chat with them or Peter. And it's partly, again, that experience level, and part of it is to say, again, my impression, I'm not saying this is a fact, my impression is, hey, if I can just pass this file to somebody else, it's no longer my issue. And now it goes off to the appeals division, and again, we sink some more money into it in terms of arguing with Revenue Canada. And again, for the most part, we find reasonable decisions. We don't always agree. That would be fictitious to pretend otherwise. But I'm surprised at the nature, perhaps, of some of the items that we're debating. Because, and again, in fairness, some of them are a little bit more subjective. Common example may be that you've paid some money for professional development. Right. Or you're going to different networking events, for example, or you're learning more about property management, things of that nature. Revenue Canada can be pretty aggressive with denying those types of expenses, where I think a reasonable person who's familiar with the industry would say that that's normal. It's a cost of doing business. Sure, if the person in question doesn't own any real estate and hasn't for 5 years, I mean, yeah, I would be looking at denying that as well. But it's somebody that is actively investing, and maybe not even just pure real estate. I mean, there's kind of side types of investments, if you will. To me, that's just an area where we're wasting time.
The other thing that we're seeing a lot more of over the last couple of years, they're arbitrarily assessing. If you haven't filed your tax returns, whether it's your HST, whatever the case may be, corporate, personal, it used to be able to go for years before they would. Now, you're going to get an arbitrary assessment, which is basically CRA saying, we think you made X, please pay this in tax.
So some of those people that have said, well, I don't owe any money, so I'll file later. Those type of people. Oh, no. Ooh, okay.
And you just have to file, and the arbitrary assessment goes away. But I'll give an example. I had a client the other day, hadn't filed their HST return in a few years. It was a couple $100,000 in HST. Okay, they got to file, and they're paying the penalties. They got arbitrarily assessed for $8 million.
Okay, that's not close at all.
No, but
it's not meant to be.
It's not meant. It's a scare tactic.
Really?
Yeah.
Yikes.
Get your stuff together.
Yeah.
You know.
Wow. That's yeah. Wow. So my next question is then on that, I was going to ask, when you actually talk to these guys, are they relatively reasonable?
In that case, yeah, because they know it's just an arbitrary assessment.
Right.
They're going to give you X amount of days, whether it's 30, 60, 90 days to get everything done. What you don't want to be is the guy who, after that period, still hasn't filed the returns, because then they tend not to look on that. But as soon as you file and you put what they're supposed to be, the arbitrary assessment goes away.
Jeez, I've never heard of that before.
Oh, yeah.
Because we've had that, where they're like, oh, I don't owe anything, who cares? And maybe the government owes them money, and they're like, well, whatever, right?
Yeah. It's also if you've had a history of owing money, and then for some reason you're not. Like, I remember myself, when we switched to DNC, we used to pay HST on our own when we were DNC, and then I forgot to file my HST return. There were zeros for a couple of years. CRA arbitrary assessment, and I was like, okay, I just filed 2 zeros and they went away. Like,
That's awesome. I think it's fair for Revenue Canada to do
absolutely.
that. I mean,
not complaining about it. If you haven't filed,
absolutely.
it's your fault.
Yeah, fair enough.
And admittedly, I got one this week. I'd forgotten I had this corporation that's been doing nothing for a while. And actually, it's not per se an arbitrary assessment yet. It's a demand to file. But and again, I get it. I'm unquestionably guilty. I need to file it, put some zeros onto it, off it goes. But until I file those zeros, I mean, Revenue Canada is perfectly right. I could have made $1 gazillion with that company, and I'm absolutely positively required to file and let them know about that. No question.
Yeah. Well, I guess it makes sense. Because I know when clients come in and they're like, well, I haven't filed my taxes in X number of years. Maybe they didn't know something. Fair enough. But now we need to do it because the bank needs it for whatever. And here we are, right? So, yeah.
I wouldn't recommend that anymore. Be vigilant to file them every year.
Yeah, especially if they're simple. Go to the drugstore, fill it out, mail it in.
Yeah.
Right? If we're only talking 1T4 or whatever it is. Then...
You don't even you can go online. They're free online tools.
Oh, yeah. There you go.
Yeah.
I mean, I'm probably dating myself now. My parents used to do the old was it green and pink and yellow forms and back in the day. So, okay. So what changes are you noticing? Let's talk about 2019 because that's obviously the current the current tax year that we're going through. What are changes? Let's start with self-employed. So, and if you want to lump in 19 and 20 by all means, but what changes can we note if you're self-employed relative to taxation?
Really, in my mind, there have not been a lot of changes, and we're not expecting to see, absent changes in the budget, there's nothing really in legislation that's going to rock somebody's world. So sure, a variety of I call them Mickey Mouse tax credits. Those are going to change all the time because depending on the government and the year, they're going to get rid of some, add a few, add a couple $100, take off a couple $100 type of thing. The various exemption rooms and whatnot increase a little bit with inflation type of thing, but nothing really overwhelming as compared to what we were seeing a year or two ago in particular. Right now, it's quiet, where it's more now kind of really waiting for this next budget to see what, if anything, from the re-election platform might come out to it. Even on the provincial side, what's going to happen there? The province had a brutal experience last year with the budget. So how are they going to address that this year while still having all the same financial problems as a province? At least the federal government, they seem perfectly happy to ignore all the problems, so it's not really an issue.
Hey, they made pot legal. There's really no issues. Come on, let's just put it in perspective.
But there's changes from a tax perspective that we're nervous of them bringing in, I guess. And there's been a lot of talk of, will they change the capital gains inclusion rate?
I did hear that, yeah.
Will they take away some types of planning that are available with capital gains? Some people will suggest that they were floating some trial balloons last fall and summer in terms of should they remove the small business deduction? Should they remove the capital gains exemption? There's a handful of things, and to what degree we don't know. There's in the re-election platform materials discussion of denying interest expense where there's not a sufficient profit level, and what type of conditions are going to be around that.
Sounds like nickel and diming almost.
Well, the interest deductibility thing could be enormous depending how that's interpreted. So if, for example...
Or how much they choose to go to, like the amount, right?
Right, so they were proposing, or again, kind of floating the concept that in certain scenarios, if that interest or profit level was less than 30%, they weren't going to they weren't going to allow some interest costs. And again, there was a whole bunch of potential what-if scenarios. It's out there, but we don't know. We need to see some legislation.
Yeah.
If they do something like that, it could be, depending on how they write the legislation, it could affect 3 people or it could affect 3,000.
Yeah. So the scope, we don't know yet, but depending on what they choose to go with.
Talking about getting rid of the small business deduction, that would be massive.
Yeah. And do you get the sense the government's in a place right now where they're trying to collect more money somehow, some way?
Oh, absolutely.
Yeah.
There's no question of that.
It's a weird time right now, eh? It's a weird time. Between viruses and Trump tweeting crazy stuff and, what the Fed did yesterday, it's a weird time,
It'll be interesting, I think, on the federal budget side as well in terms of where they're going to pull the support to approve a budget. Mm-hmm. Presumably it's the NDP, and they're not exactly business friendly. Although in fairness to them, they're usually small business friendly. But again, that may certainly bring the general budget a little bit further to the left than what many people would be comfortable with.
Yeah.
Or maybe they do get the Bloc or somebody to support. It's not coming from the Conservative Party. Even if it was a good idea, it's not coming from the Conservative Party. But it's against their nature to agree with each other.
That's right. Exactly.
And I mean, 2019, obviously an election year, they really weren't going to put a lot of these things out there. And with a minority government, I'm hoping that they're not going to go crazy. If it was a majority government, I think you'd see big changes right now.
Yeah. They were talking about that a lot during the election. The minority government just, probably not a lot going on for the next few years, right?
Hopefully not.
Yeah. My biggest fear is that they estimate the economy growing a lot faster than it really will.
Yeah.
And then the deficit balloons. We're already starting to see that.
Well, and listen, rates, we see rates moving. We see the Fed cutting. Guess what automatically starts happening? All right, people start spending more money. Our market here in KW is insane. We had a house with 50 offers on it. I don't know where all those people were from. I'm guessing they weren't KW. But as soon as rates start to drop, all of a sudden now, everyone's back in the market, right? And then, I mean, it's a little rule change they came up with in April. That's not going to move mountains. Like, let's not kid ourselves. It's really not. But it just keeps up with the market and where it is, right? Mm-hmm. So, yeah, very, very odd time right now. So,
but what scares me about that is they're dropping interest rates not because it's a good time. They're dropping interest rates because they're scared.
Yep. Very good point. Very good point. And I mean, we see the markets move the way they did, right? Just recently. I mean, huge up and down. And it's a very, very good point. And I don't know, do you guys, here's a question for it. Do you ever see over 5% rates again? Like, when will we see this in our lifetime, over 5%? Think about the amount of debt out there.
That's exactly where I was going. I don't know.
Yeah.
Because when we were younger, government debt wasn't that huge. They could afford higher interest rates. How much more would we have to pay as a country if it was 7-8%? Let alone on your mortgages, just federal and provincial debt.
Yeah, you're thinking government. I'm thinking household.
Oh, I'm thinking that's why I think it won't go up, because the government's be too scared to move it. Unless we're in a booming economy that has like 10% growth, but are we going to see that?
No, we're not. I see a lot of clients right now, and you know what? It's the low rates have got us here.
Right.
It is what it is, right? And some people have done it smart. They've invested in real estate, or they've done it to truly build wealth. But then we also have the other side of the coin where they got nothing to show for it. And my son, I don't know if I've said this on a previous show or not, but my son's turning 19 this year. He's working at Boston Pizza part-time. He's been there 2 years. And he comes to me with his mail one day, and he got a pre-approved credit card for $3,000. His question to me was, what do I do with this? So I hear that, and I'm thinking, wait, whoa, why? Why are we giving this out like it's free at 21%, right? But they don't even know what to do with it, right? People get credit, they don't know what to do with it. You can be not working and get credit or pre-approved. So it's a scary time that way, that's for sure. So rental properties. So people who have rentals, any changes, any little hints and tips you guys have between 2019 and 2020?
I don't know that there's a change per se that they really need to be concerned about directly from a tax perspective in terms of rule changes. More of, as a result of rule changes from the tax side a couple of years back, plus the financing changes, is where we're seeing people organize their structure for the real estate properties differently now. So prior to 2018, for example, we would see a lot of people using what we would commonly call a 3-tier structure, where I'll call a parent company would own a subsidiary that owned real estate holdings and may or may not have a property management company associated with that. From a tax perspective, in many cases, such a structure would now making a long story short, create double tax indifference in the situations where how we used to use that structure. So there were tax and legal reasons for that creation of the structure. And certainly myself, I'm still set up that way to a degree. Many of our clients are, but we're shifting so that we're using more family trusts and having the family trusts own an assortment of real estate holding companies, for example, or operating activities, etc. So it's more galvanizing that, I think, as compared to a specific rule change for 2019-20. It's more addressing how financial institutions are dealing with lending to subsidiary companies and being able to address the tax issues as well. So we're doing a lot of tweaking of those structures. And I expect that over the next 5-ish years, assuming that the tax rules stay more or less where they're at, we will see the majority of our I'll call it, and I don't mean this to be disrespectful to people in the slightest, but I'll call it more of our serious investors. I think will have a family trust with real estate holding companies, etc. Whereas somebody that's going out there and they're going to buy a $100,000 condo in some little town type of thing. I mean, again, congratulations, that's better than most Canadians, I would suggest, but it's not going to justify a fancy-dancy structure.
I think that's important to understand, though, and I don't know if it's because of the role that I do, obviously, because with RBC we can put things in corps, but so I get the question quite a bit, but I do get the question quite a bit, and listen, they ask me and I'm like, I don't know, I here's what I can do, go talk to your accountant, because I'm not going to tell you to go incorporate, because I can just imagine that email if I can't get something done. But I think that's important, and I don't think there's any disrespect there involved at all. If you've got a couple, barring you're self-employed or all the other factors in your world,
and legal issues,
absolutely, if you got a condo or two, hey, no big deal, right? I don't know, again, barring the other side of the advice, that it's really justified. But when you get more complex, and we have our complex people, I call them, they graduate, right, from a couple of single families into multi-residential or a whole bunch, then yeah, you got to get some advice, and you may need to do that, because you want to have an exit strategy, I think. Yeah. And as I get older, I think about that, like, how do you get out of this? What happens when you die, right? Yeah.
I think a lot of people, unfortunately, it's the cookie cutter answer. My friend has this, so I have to have it, or everybody does this. No, it's dependent on you and your facts. Just because you have this and someone else has that doesn't mean it makes sense for you. Like, there's so many different times when it has to be taxpayer specific, individual specific advice. And I find too many times people are just getting generic advice, and assuming this is what I have to do.
I think sometimes people, so listen, my advice is free from the bank, okay? So they can come and talk to me for an hour, no big deal. But I think, and I'm a big believer of, pay to either, get the right service, the advice, the work on the house, the whatever. I think there's so much information out there that people think they can do it on their own. Yep. And I had this recently with a client where they incorporated, and I'm looking at it and I'm like, and again, not an accountant, my spidey sense from experience say, why? So, and I remember you actually used that term cookie cutter on the last podcast, because that resonated, right? Yeah. And it's true. It's absolutely true, right? Yeah. We see it all the time, right? Yep. So, and then if it's not structured properly, or the wrong shareholders or the directors or the whatever, right? It just goes down a road you just don't want to go down.
I think for 2019, the biggest changes haven't been on the tax side. It's been on the financing side. You and I have had this discussion on, oh, this doesn't work anymore. Or, any good professional is going to have to talk to other professionals, lawyers, bankers.
Your team.
To get your team. You're going to have to give the advice. Like, it can't just be, oh, this makes sense for a tax perspective, we got to do it. But because if you can't get financing, what's the point?
And I tell people too, listen, your correct tax structure, strategy, whatever, does not always equal an RBC mortgage, a Scotia. It may not equal that. If you're going to save thousands of dollars on taxes because of whatever, go with a B lender at an extra % and a bit, because you got the right thing, the right structure, right? So, because to your point, banks have gone that way, right? How do I put this? I don't think we've gotten stricter, but we've just changed. We're doing this instead of this now. Or, to your point, you can't do that anymore. Now it has to be this way. Maybe this doesn't fit with you anymore. That's okay. Don't change your tax strategy just to make a mortgage fit, right? I think that's important for people to understand too. So,
and I think now it's also looking at that structure to ensure we can get mortgages. So I think my impression is that a lot of things that are driving people in terms of those structuring decisions now, and frequently I'll get the email, hey George, we just set up a corporation or a trust, or we did this or that, now I can't get financing, what's going on here? And so then we can introduce them to some, okay, why don't we stop using the way or the methodologies that we were using a couple of years ago. Just as you said, the rules change, and we can argue about it, but Royal Bank has more the money than I do, so if I want to use their money, I'm going to follow their rules.
Yeah,
but
as long as it makes sense within their structure.
Right.
Right.
But I think at times too many people, and again, I'm not trying to be a smart aleck in terms of, they may walk into the branch and start talking with whomever the first person is that they see, and that's not necessarily the specialist that they should be focused on. And again, I'm sure the person in that first line is trying to do an awesome job and all that sort of stuff, but they don't necessarily have the specific experience necessary to deal with that investor.
Yep.
But those people do exist. So we get a lot of driving changes as a result of financing. The other thing and I don't know if this is just more anecdotal, but I perceive that I've had more people come to me and say something to the effect of, we just kind of took care of mom or dad's estate, and I never want my kids to go through that. I want to make sure things are cleaner, ready, my kids understand what's going on. Let's use this as a learning opportunity to ensure that down the road it's not as emotional, challenging,
onerous,
all sorts of words there. Yes.
Yeah. Unfortunately, we've had a lot of people, not a lot of people, we've had family pass and friends pass, and that's exactly what starts to happen, right? We have to ask the questions. I know Trace and I, we got everything set up and got a plan where we're going to get buried or spread, and then we're good to go, right? But,
right.
Yeah. That's important.
Yes. And so it can be done in a non-depressing way, and it, again, to me, even offers a huge tax saving opportunity. But I think being able to share that knowledge with the next generation and mentoring role where, yeah, let me kind of teach you what I know and find out, oh, wait a minute, I've got 2 kids and maybe neither one of them likes real estate, or they're going to be, they like something completely different. One of them really likes it, one of them doesn't. And again, some of our structures now that we're putting into place can start to accommodate those changes. And as well, maybe my kids, if they're 5 years old, well, who knows what they're going to be doing later on. They could be 20 years old, and I still don't have any idea. Or they may be so laser focused, we know exactly what's going on. And back to Peter's point of why we're trying to tailor advice to people as compared to that generic advice. But I think just having an opportunity to sit down for an hour, talk about things, put together some plans, and even if that plan is to say everything is good right now, but when you hit such and such a threshold or this particular event happens, now we need to look at stage 2 or 3 or whatever that may be.
And there you go. There's part 1 of 2 with Peter and George. Make sure you listen into part 2, episode 40, because we talk about really 2 things the whole episode, because they're really important. One is what happens if you're a shareholder of a corporation, you've got rental properties, and you die. How does that work? What happens to the property in the court? The second thing that we talk about, which is actually most of the episode, is the new legislation around realtors incorporating. It has obviously passed. They've got some information. If you are a realtor, that is a must listen to. Until next time, folks, we'll talk to you soon.
Thank you for listening to the Green Effect Podcast. Subscribe to this podcast on iTunes or Google Play so you catch the next episode. And don't forget to leave a review. Much appreciated.